Mike and Tom are registered with Stewart Partners Global Advisory LLC.
Common Sense Finance with Mike Wiginton and Tom Farrell of HL Wiginton Capital Management, an independent investment and financial planning firm in downtown Jasper. Mike is a chartered financial analyst charter holder, and Tom is a certified financial planner professional. They are here to discuss and give their thoughts on current financial and economic matters. Now, with Common Sense Finance, here are Mike and Tom.
Hey everybody, this is Tom Farrell and Mike Wiginton. We're here to talk about today what I call unwarranted fear of investing. Talk to folks a lot and they say, I don't want to invest my money in the market. I don't want it to go to zero. Don't want to lose all my money. And Mike, you've probably ran across some folks like that as well in your line of experience.
Yeah, I've had that very question. I've had a client look at me and say, "Can you assure me that this investment in the stock market is not going to zero?" And so that's something that it causes me to think, okay, does the client really have a firm grasp on exactly how we're investing the money, what the behavior of that type of investment's going to, what kind of experience they're going to have in terms of the behavior, the ups and downs. And that leads into a lot bigger conversation. And so the way we put it is like this, right? When you come to us and say, what are your goals for your money? People say, I want to make money. That's kind of response you get. I want my money to grow, right? They're kind of all same sorts of responses. And so the answer, we start trying to boil that down to this. Listen, if you want growth, you only get growth or you only grow wealth through ownership. And right, obviously we know you can go out and own a business directly, you can own real estate directly, and we know their stories are countless about businesses that go under, right? You can lose lots of money, you can make lots of money in real estate, okay? But in our line of business, we're advising people on passive forms of investing, ownership, which is through the stock market, and lots of times. And so, absolutely, we say you can own, if you own an individual stock, Caterpillar, Coca-Cola, Walmart, whatever, there is some probability of bankruptcy. That investment, I don't care who it is, right, that could go to zero.
Depending on the company, it could be a larger percentage probability, or some of them are much smaller. That's
exactly right. One of the primary ways that we're handling client monies is through index funds, exchange traded funds, ETFs, and so when we start talking about owning the whole stock market, we talk about taking away bankruptcy risk. You own the market. You're tracking the market, and what does that mean? And if that is your position, and I mean that's what you own, those are your holdings, and you're asking, okay, can this go to zero? Then that takes on a different path for the conversation. So, do you understand that you own the industrialized world? And we talk about that. I used to say that if you own the S&P, the Standard & Poor's 500, as your proxy for the stock market as a whole, then the companies like Caterpillar, I mean, it's a significant percentage, close to 50% of their revenues are out of the United States. Right. So really, it's not just owning the industrialized United States, you're owning the industrialized globe, right? And so if industrialized America goes to zero, this is the way I think about it, what does that mean? There are no banks, there's no grocery stores, there's no industrial companies, and you don't have an iPhone. I mean, what world is that? Well, that's a world that, your cash doesn't have any value either. So, I mean, let's put this in perspective so that we can make rational decisions about how to invest the money. And then we start talking about what kind of ups and downs should you experience. But the stock market almost has to go up over time. It's the math, right? Yep. Stock prices are based on earnings, right? Corporate earnings. Corvettes cost more today, right, than they did in the 1960s. Sure. Almost every basket of goods that we consume is more pricey today than they were 10 years ago, 20 years ago. You get the picture. Right. We have this chart. I think you pulled it up for us. We're going to overlay it on the screen. That goes along with an old saying, the market climbs a wall of worry. Yeah. And so that you can see over time, this chart's since like just in the recent last 10, 15 years?
Yeah, last 10, 15 years, and it shows exactly what the market's done based on, the financial crisis of 08, 09, different scenarios, some things that folks may have not heard of, the debt crisis, things like that.
But the chart we used to see back when we were kids in the business, it went back to like 1900, and it shows how the market reacted through the Depression, through all the wars, the Korean War,
Right.
the Vietnam War, recessions,
All the way
bear
through
markets.
9/11.
That's right.
Yeah.
And the point is that yes, the market goes up and down, sometimes a lot more than we want it to. But why does the market have to keep going higher? Okay, the answer is profits. So think about this, right? There are several factors that influence the long-term sustainable profit making for any company, okay? Several different factors, but none are more important than innovation. So I ask people all the time, I said, do you think the iPhone 8, now obviously that's ridiculous because we're at like 11 or something, 10.
No, they've gone to letters now.
Right. So the iPhone 8, you think that was the last advancement in information technology? You think that was, right? Yeah. Do you think the MRI was the last advancement in medical technology, healthcare technology, any more than the VCR or the typewriter was the last advancement, right? So I mean, a middle school person could tell you just about as soon as the new phone comes out that it's going to be obsolete in a few weeks, right?
Yeah.
And so the point is that you have this innovation that's pushing industrialized civilization and profits higher and higher. People say to me on a regular basis, we need to find the next Google or the next Apple. And I'm like, yeah, me too, right? I would love to do that. But here's the thing, if you own the market as a whole, right, the entire market, you're by default going to have the next Google or the next
Right.
Apple.
Or you can pinpoint the technology sector and buy all the
Exactly.
stocks in that space.
And those are the forces behind what drive the stock market higher, profits higher, and why it has to go higher. So, to have a little bit more in-depth understanding of what's there, and I mean, I guess it is to some degree getting into the economics classes, a little economics 101.
Right.
But that's okay. I mean, I think you should have that level of knowledge if you're going to invest your money, and you should be comfortable with the ups and downs the market's going to take.
Yeah. Well, and some people we talk to just say, hey, I'm not going to fool around with the stock market. I'm just going to stick to real estate, or I'm going to buy some real estate. And a lot of folks that are in real estate, and they may or may not realize this, but you can pull up a stock quote every minute of every day on your phone. But when it comes to real estate, you don't get a statement every month to tell you what the actual market value of that real estate is at any given time. And I think if folks were to get appraisal value of their real estate every month, they may look at that a little bit differently as well.
That's absolutely right. You make a great point that a lot of people don't ever think about. And I'm a great advocate of real estate. I love it as an investment class. Personally, I'm speaking of it's been both my best and my worst investments. But that's a fact. People that think that there's no risk, real estate always goes up, they're just wrong about that, okay? And they don't have a clue in what kind of risk they're taking, and the fact that you've got to make an awfully lot higher, I'd say 2 to 3 times the return in real estate that you make in the stock market to get the same level of risk-adjusted return, right? If I say all the time that a bad real estate market will make you long for a bad stock market, because if I don't want to be in this particular stock or fund anymore, I hit a button and I'm done, right?
Yeah.
Right. With real estate, you don't have that kind of liquidity.
It may
right?
take years.
That's exactly right, and put up with the capital calls and so forth, and the personal relationships and your business partners, and it's a totally different risk class or asset class with a totally different risk profile for sure.
Yeah. Well, that's kind of wrapping up what we talked about, the unwarranted fear of investing. Hopefully that's helped some folks better understand investing in the stock market. And for that, we're done, and we'll see you next time.
Just can't believe all the things people say. Controversy. Am I black or white? Am I straight or gay? Controversy. Do I believe God? Do I believe me? controversy. I can't understand